Welcome to our weekly Forex and Futures forecast. My name is Jay Norris. As always, we need to remind you, trading is a risky endeavor and not suitable for all investors. Hey, we're very excited. Our third book is out. We're getting some good feedback from clients and even from people we don't know, we don't work with, and they're saying it's already helping them. So that makes us feel very good. It's a very powerful book, very powerful ideas in there, risk tolerance threshold theory. I think once you have that under your belt, you really start to look at markets different, and that's going to put you on the right side of things. We think that book is very helpful. We're very proud of it. Getting to the markets, here's the Australian dollar. First market we're covering. Nothing has changed here. The day-to-day pattern is still down, so that tells us that as swing traders and short-term traders, we've been working the short side in the Aussie. And you can see if I drop down to a 4-hour chart, you see a very definite pattern there. How you take advantage of that is going to be take advantage of every time you get a counter trend line break, such as there's a counter trend line break. There's a counter trend line break. There's a counter trend line break. So literally every time you get a counter trend break, you're alert to be taking sell signals. Ideally, you want to trade multiple contracts. Put two on, take one off. Put two on, take one off. Put two on, take one off. This way, as you go, you can build a position, right, as it moves along. Put two on, take one off. Put a break-even stop on the one you let go, and you'll find you'll catch some nice winners like that. So at the end of the week, you may have accumulated a couple of contracts, and ideally, that'll give you a satisfactory performance for the week, right? So Aussie dollar, we continue to see weakness. Our initial downside target's 101. You'll probably have a little bit more to go there. That's just how markets go. If you pick up some momentum along the way, that's our initial target, 101. Wouldn't be surprised if we get below par, though. Secondary pattern is still higher in the Aussie, as is the primary pattern. But that day-to-day pattern, that's very influential for short-term traders, so that's where our focus has been. So we expect some more downside in the Aussie. Euro US dollar, you had a nice breakdown of that day-to-day pattern. Once again, the day-to-day shifted here lower. We wrote about that last week, and we'll put a link to our Seeking Alpha blog at the bottom of the article. We don't always get around to doing the video, the Forex forecast video, because sometimes we're just out of town. It's just impractical. But more times than not, I can crank out an article from a hotel room or wherever we're at. So I'll put a link at the bottom of the video to the Insta blog, because that's where we do a lot of our work there. So it's a little bit more timely way to deliver what we're doing to you also. We write a couple articles a week usually. So the euro, we definitely expect some more downside in here. We're very definitely interested in selling rallies. Really the same strategy. When I show you that intraday chart, you're just looking for those counter trend line breaks. When you get the counter trend line break, particularly if it's in a risk tolerance zone, sell zone like that, you get those counter trend line breaks. You want to be mindful to get short and ride those down. Again, put two on, take one off, put two on, take one off. The idea is to build a position as you go. So at the end of the week, end of the month, you'll have a pretty satisfactory performance, right? That's what it's all about as traders. So we think there's some more downside in the euro. We think 126 will be our near-term target. However, you need a couple closes, at least one close, probably a couple of closes below that 130 level. As long as 130 is holding, there's a shot at a short covering rally. We would welcome a short covering rally. That'd just be another opportunity to get short from our perspective. You've got the euro, the day-to-day pattern is down in line with the primary. That's very powerful. So we would welcome a rally to sell. We would welcome a close below 130 so we can keep going at it on the short side intraday and as swing traders. Here's the pound. You know, we've talked about the pound, how you have pretty good support between 151 and 150, and we think that is the case. We know a lot of professionals aren't really going to go after that 150 level, so if you get a couple of closes below it, that'd be different. Here's what's interesting about the pound. Here's what you want to know about the pound. The pound topped out in late 2007, right? October, November of 2007. The pound topped out. It was the leading indicator market back then, right? That's when it topped out, late 07, early 08. Let me go back to the euro, and I'll show you when the euro topped out. Euro didn't top out until well into '08, July of '08. It first topped out at April of '08. So the pound topped out well ahead of the euro. The pound was leading indicator back then. We think you have to take the pound seriously as a leading indicator right now. For our money, we don't know how much downside there is in the pound. I would expect that you'll have support at the 2010 low, the 142 or so. But until the pound closes below 150, we really can't go after it on the short side. That's pretty good support between 151 and 150. So we have really no interest in going after the pound until you saw a close below that 150, and preferably a weekly close. That's a big, big level. So really nothing to do from our perspective in the pound. But we respect the pound, and we can consider the pound a potential leading indicator market. And given the pound topped out first, we can consider that, again, a leading indicator market. X-market dollar yen. We had talked about this. You could see it held that 50% line right there. So if you didn't do any technical damage, then you're going to line right up and look for buy signals again. And here you can see them on the lower time frame on that 50%. We look for double bottoms on the 50%. And look, wasn't that a nice one? Triple bottom on that beautiful 50% level in dollar yen. So it was right back on the upside in dollar yen. So you did no technical damage. You go right back in on the long side. We understand that. What's the secret to trading? Repetition. People are repetitive in what they do, therefore markets are repetitive, so you got to take advantage of that repetition. Once you get on the other side of risk tolerance threshold theory, everything opens up for you. You see the power of repetition. That's where you want to go as a trader. That's where you need to be as a trader to take advantage of that. Hey, let's take a look at the gold market. Gold in some trouble here, no doubt about it. The day-to-day pattern has been down. Most recently, the secondary pattern shifted down. We had written an article a couple months back about the possibility of gold sweeping the 1500 level. We think that's a real possibility now. Gold broke down. It couldn't hold this. It had a little pattern of higher highs in here, higher lows in here. Once it broke that pattern, look at how quickly the gold market collapsed. So secondary pattern down, day-to-day pattern down, 1500's looming, right? So we think any rally in the gold market for now needs to be sold. The one caveat I put on that, though, is if you were to see suddenly a U.S. stock market correction, we think that would put a bid in the gold market. We're going to cover U.S. stocks next. We think at this point in the cycle that the strong dollar we're seeing, we're going to continue, we think we'll continue to see a strong dollar, weak currencies, particularly the euro. You're seeing it already in the pound. We think you'll continue to see a weak Aussie also. That's dollar bullish. That's going to support the U.S. stock market near term. So we think there's more downside on gold, especially if the stock market, U.S. stocks continue to strengthen. However, if something out of the blue happened and the stock market started accelerating lower, that would probably put a bid in the gold market. Here's the U.S. stock market. Speaking of the big bull here, we think that there's some more upside to it. It'll take a while for a strong dollar to become a headwind for U.S. companies. Initially, as the dollar is strengthening, as we're seeing what's happening against the pound, as it's just starting to against the euro, it's kind of had a little bit of a lead against the Aussie. As the dollar strengthens, that will actually attract foreign flows into the U.S. stock market as people in those other countries. In Japan, we saw that was the first market to weaken the pound. So you'll see money coming from Japan, from our British friends, from the European continent, even from potentially Australia. You'll see funds from there coming into the U.S. stock market to take advantage of the weakness in their currencies versus the dollar. So we think overall that eventually will create a headwind that won't be so friendly for U.S. stocks as U.S. companies start to feel the pinch of a higher currency price. However, near term, that's not necessarily an issue yet. Investment funds will come in first. The faster money will come into the U.S. stock market first. So we still think there's some upside. And this is another market where, yeah, you had a correction last week. Early in the week, it did no damage, though, whatsoever. It really did no technical damage. Investors, traders saw it as an opportunity to buy again. So we think you're that close to the all-time highs. We think you'll probably see them. And right now, a strong dollar, somewhat counterintuitive, is going to continue to support the stock market. Thank you so much. As always, we're excited about that third book. We think that'll be a big help for clients. If you want to know more about what we're doing at Trading University, you can go check us out there. Or if you want to get things going a little bit quicker, if you want to get into our program for free, if you open up an account with Forex.com, FXCM, or OpenECry through EOS Trade, you can get in the program for free. So that's one way to get you in there. We're pretty excited about everything going forward. Again, if you want to see the link to the new book or the link to our Seeking Alpha blog where we have a little bit more timely information for you, just look at just below the video and there'll be links there for you. Hey, thank you so much, and we'll catch you next time.